Hi everyone. I think we can start now. The others will find us where they'll find us. So, welcome to the meeting. Today will be the last meeting of the year, and then we'll resume now starting from next year. For today's class, we're going to have a brief recap of what we went through last time, and then we'll go through today's lesson. The meeting will only take place for 1 hour, and uh, I hope I'm audible. If I'm audible, if everything is okay, just give me a thumbs up. Okay, okay. So we begin by going through what Forex trading is, and we said that it's basically foreign exchange. Forex is the short form for the word foreign exchange. And here's the link to the first document. I introduced you to what Forex trading is, which is basically exchanging one currency for another. And people do that for different reasons. For example, you might be traveling to a different country. Right now, we are in Kenya. Most of the people here in the chat, I think we're in Kenya. So, let's say today you decided to go to maybe United States or Dubai or just a different country, you'd have to go to the bank maybe and change your money from Kenyan shillings to another currency. Let's say you'd have to change to dollars if you are traveling to America, etc. So that's basically what Forex trading is. The traditional way is going to the bank and changing your money from, let's say, Kenyan shillings to dollars. But for us, uh, we're going to be learning how we can do that without needing the bank to be the middleman. We went through how you can get started, and how you can get started is using a platform that allows you to change now, to do the exchange yourself without needing the bank. So we went through how you can actually pick a trading platform, uh, and I told you you need to check if the platform is licensed. You don't just pick any trading platform. You first go and check if it's a licensed broker. And how you do that, for example, here in Kenya, it's the Capital Markets Authority, and everything is in this document. So you want to save this link. So yeah, you go to Capital Markets Authority, you go to their website, and then you check if a trading platform is licensed. So for example, we decided that we're going to be using HFM for this period. HFM is a trading platform that allows you to now participate in the Forex market. And as you can see, it's licensed by the Capital Markets Authority. There are other platforms here in Kenya that are also regulated, and I also included the link here. This is the link. You can check out different brokers, and then you decide if it's the right fit for you. The next thing that we talked about is the tools that you need to get started with trading. And we said that they are these four, like they are the basic tools that every trader must have. There's TradingView, there's Forex Factory, which is what now we went through last time's lesson. We went through each and every tool. We also went through the different trading times. that you can use to trade. We'll go through that in detail in the future, but for now, I want you to know that you can't just get into the market anytime. There are sessions when the market is quite volatile. There is also the part about financial news. We went through the type of news that you're supposed to avoid, and yeah, yeah, these are the tools that I was telling you. We went through how you can open a demo trading account, and I've listed all the steps in this document. So you can do that, and if you're not able to open, you can just text me, and yeah, I'll be able to help you from there. You need a demo trading account so that you can begin practicing. Uh, we also went through how you can set up TradingView. TradingView, we said, I've also included the link in the document. So TradingView, if you can remember, I told you it shows you how the different currencies have been performing, and you open TradingView and you come to this link for market and then head over to Forex. Let me pick a pair. Let's open the euro dollar. All the steps are here. The third tool that we went through last time is Forex Factory. So Forex Factory is where you check if there are financial news happening on that day. We went through how you're supposed to set it to also New York time, and to filter out the news so that you only seeing. Let me go there. So this is TradingView. We went through how you can set the time to New York time. All the steps are in this document. If for some reason you are not able to follow last time, you come to this time tab and you set it to US and Canada time. Then you save the settings, and then you also want to filter out the news so that you're only seeing the high impact news and the medium impact news. We also set it to only show us the USD news because we're mostly going to be trading currencies, major currencies. That is the euro dollar or the pound dollar, and that's it. So for today, as you can see, today is Friday the 19th. Here are the news that happened today. So at 10 a.m. New York time, let's see what time it is. Currently, this is the time. I hope you can see. So currently it's at 11:46 in New York. This is why you need to first check if there's anything happening during the day before you start placing your trades. Tomorrow is Saturday and Sunday, and I told you the currencies market, they are only open on from Monday to Friday, and then they close at Friday midnight. Then they'll resume again now on Monday. You can always see the news before they happen. So the other thing that we went through was how to set up an MT4 or MT5. So MT4 or MT5 is now where you're going to be placing your trades. This is an MT5 account. This is how it looks. This is the balance. This is a demo account. For executing your trades, here's these are the buttons that you will be using. You see, you can either buy or you can either sell. And then this 0.01, we're going to go through. This is a lot size. The minimum lot size that you can trade with is 0.01. And yeah, we'll go through this in another lesson. But right now, I just want you to have a basic idea of what an MT5 account is, and this is an This is what an MT5 account looks like. This is what Forex traders do. They either buy or sell, and then they make money when the currencies fluctuate. But we'll go through that in today's lesson. We'll go through what is selling and what is buying, and how you actually make money when you sell, or how you actually make money when you buy. That's how an MT4 or MT5 account looks like. So I've also included all the steps on how you can download, how you can set it up. It's all in this document. So you can do that. And maybe if you have any question, you can just text me on WhatsApp. For today's lesson, we'll go through chart reading. Chart reading, if you can remember, you use TradingView, the one that we've just gone through, to see the different charts. For example, this is a euro dollar chart. If you wanted to see maybe how the Kenyan shilling is performing against the dollar, you search, you just search here. So this is how it looks like. The Kenyan shilling against the dollar, that's a minor currency. But for the major currencies, they usually have lots of movements, but we'll go through what this chart means. So let's begin by going through what buying and selling is. If you can remember, we said that forex trading is basically exchanging one currency for another. When you buy a pair or you go long, or in the forex market, you'll hear people saying, I'm bullish on the dollar, I'm bullish on this. It just means that you're expecting the currency to go up. For the currency pairs, this is how they usually paired is the stronger currency is usually the base currency. Like for Euro USD, it means that the euro is stronger. It has a higher value than the USD. So let's go to that chart. That's how you search for different charts. Euro USD. You can use any, but I prefer using this one from capital.com. This is how the euro dollar chart looks like. This is how you go to different time frames. Like today is Friday 19th. So when I hover, it shows you the day. And if you want to see the current value of 1 euro, currently it's at 171 1.17184. So what does that mean? 1 euro is equivalent to 1.171 USD. As I've mentioned, how they are paired is the stronger currency is usually the base currency. Comparing the dollar to the Kenyan shilling, definitely we know that the dollar has a higher value than the Kenyan shilling. So it will be USD Kenyan shillings. Yeah, this one. Let's go to the monthly chart. This is how the Kenyan shilling has been performing against the dollar. Currently, when you go to the bank and maybe you're traveling, let's say maybe you're traveling tomorrow, you're going to the US, you need to change your money to dollars. When you go to the bank, this is what they'll tell you. They'll tell you the current value is 128 or 130. So what does 130 mean? It means that if you had let's say 30,000 Kenyan shillings and you want to get dollars, that's the rate that they will use to exchange. So if you had 30,000 and you wanted to change all this money into dollars, and you went to the bank and they told you the current exchange is 130 shillings. So if you were to change your 30,000, the bank will give you 230 USD. Basically, that's what Forex trading is. As Forex traders, because we are eliminating the bank, we want to do the exchange ourselves. Our aim as traders is to make money. And how do we make money? We make money through those price fluctuations. When you do it physically, you'd need to hold that money for a very long time. This is the monthly chart for the USD against the Kenyan shillings. So it's currently at 128. Let's go to 2024. In 2024, the rate of exchange was, this is 2024. Every candle here represents 1 month. From 2024, you can see that this graph went down. So it means that the value of the Kenyan shilling against the dollar, it was at 100, and I'm looking at the price level here like this. It's currently here at 128, at 128, but when 2024 was just beginning, it was at 161. If you had bought dollars in 2024 and you held them up to right now, December 2025, you would have lost some money if you were to change your dollars now to Kenyan shillings. As traders, you can make money when the price is going up or when it's going down. But we'll go through that. Basically, that's what buying and selling is. So, as a trader, you don't want to wait for a whole year to make money. You want to make, let's say, on a daily basis, because the price fluctuates on a daily basis, and that's what we're basically learning in this course, how we can make money using this price fluctuation. This chart looks weird because it's a minor currency. So for minor currencies like the Kenyan shilling against the dollar, not many people trade or do business with the Kenyan shillings. This is why this chart is looking like this compared to this chart for the euro dollar. This is also a daily chart. Monday to current date. You see, there's a big difference. This one is, it looks like it's not even moving, but this one is, there's a lot of activity in this chart compared to this one. That's why many people prefer trading major currencies. You can also trade minor currencies, but that's the issue. They don't move a lot, the minor currencies, compared to the major currencies. And as traders, I've told you, we're making money. Either we are buying here and expecting the price to go up, or we are selling here and expecting the price to go down. But we'll also get to that. That is what buying and selling is. The next thing we're going to look at is candlesticks. Candlesticks are these red things and green things. These are called candlesticks. They are used to visually represent price movements. They have the body and they have these tails that you're seeing. They're called wicks. These are what candles are. You can see there are green candles and there are red candles. The green candles, they represent buying. For the green candles, this is where they open and this is where they close. This is the high and this is the low. So what is the open? Open is where the price opened at. This is the daily chart on the euro dollar. Every candle here represents a different day. Like this is Wednesday, Thursday, Friday. Yesterday was Thursday the 18th. Thursday the 18th, this is a red candle. A red candle is a bearish candle. It represents the sell. For the red or bearish candle, the open is at the top. For buying, the price opens and then it goes up. For selling, the price opens and then it goes down and closes. So for red candles, the open is at the top and it closes at the bottom. So like what we are seeing here on Thursday, it's a red candle. So the open is at the top. The price opened, I'm looking at this part. The price opened at 1.17403. If you were to go to the bank, maybe you had a dollar account and you wanted to get euros, this is the price that they'd give you. So that's the opening price for Thursday, and the closing price is the bottom part. It closed at, if you have any question, you can put it in the chat and then I'll check that out. On Thursday, for the euro dollar, the opening price was 1.17409 and the closing price was 1.17223. Basically, that's what a candlestick represents. It shows you where the price opened at, where the price currently is. Like this is today's candle. This is the current as we speak. It keeps fluctuating. I don't know if you can see, but the price keeps fluctuating. And that's how, as traders, we make our money from those fluctuations. But we'll also go through that. That's a bearish candle. It opens at the top and closes at the bottom. And for a bullish candle, it opens at the bottom and closes at the top. So that's how you would read this chart. This is a bullish candle. This is all green candles are bullish candles. When price is going up, it's usually the green, and when it's going down, it's usually the red candles. So the next thing is time frame introduction. Because the base currency is the strong one, so it means that in this chart, if it goes up, it means that the euro has gained in value, and if it goes down, it means that the euro has gone down in value compared to the dollar. This green candle means that for this year 2025, the euro has gone up compared to the dollar. For 2024, because it's a red candle, it means the euro against the dollar went down. Long term, you can see that the euro dollar chart has been going down. This means in the last 6 months, the euro has been going up in value compared to the dollar. Those are the different time frames. So there are different traders when it comes to Forex. Now that depends on you. You can choose to be a long-term trader, that is trade on the monthly, 12 months, 6 months, or you can choose to day trade, which is what we are going to be doing in this course. Day trading basically means you're trading the fluctuations from day to day. So if you're a day trader, you start your analysis on the daily chart, and this is how it looks like. These candles each represent a different day. If there's any question you can ask now, actually, because we're almost done, please allow me to finish so that from next year we'll begin with backtesting and learning the actual strategy. At least for now, if you have a basic understanding of what is trading, what tools or platforms can you use for trading, you know there are different charts, and in the charts there are different time frames. Like you can have a monthly chart, you can have a daily chart, you can have a yearly chart. At least if we have that grasp, it will be easier to move now to the actual trading strategy. And then after we learn about the trading strategy, now we can practically now start trading and analyzing the markets on the real time. So for top-down analysis, it's basically what we've gone through. You have from 12 months, 6 months. So that's what top-down analysis means. It means you start from the top going down. So the first thing is to check if there are financial news or something like that. Like what I've shown you today. Today was Friday the 19th, and these were the news that we were expecting today. At 10 a.m., we had this USD news. So that's what the top-down analysis means. You first check if there are any news which can make price behave maybe in a funny way. Then the next thing is you start your analysis from the bigger time frames. And why do you need to do that? Big players like banks or hedge funds, they usually start their analysis on the higher time frames. Last year, it went down. The previous year, that's how you can basically read a chart. This is in 2014, the euro went down in value compared to the dollar. After you check if there are any economic news, you start your analysis on the higher time frames. You can start on the yearly chart, then you go down to maybe the monthly chart. for the trading strategy part, that is what you are going to be learning. How do you actually determine if the price is set to go up or down?
Hello,
Oh, yes, yes.
I'm fine. Thanks for the class. It was quite engaging and it's becoming real. Now we are seeing candles and bears and bulls and stuff. I think it's a lot we need to now digest that
Uh-huh.
as we wait for the next class in January, starting when? Or you've not yet programmed?
I've not yet programmed, but it will definitely not be the first week of January. Maybe from
Okay.
the second week, but I'll let you know in advance.
At least now I can look at a chart and know this is bullish or bearish. Now I can see that. Maybe we can also learn about the weeks. Do the weeks mean anything
Yes,
close to end?
they do. They
Yeah,
do.
so yeah, maybe we can learn that too.
Mhm.
But basically, yeah, I think we're getting somewhere and thank you for the class today.
You are welcome. Uh, for next year, I'll try and prepare PowerPoints to make the things easier to digest. But yeah, at least you have the
Okay.
basics. Anyone
Yeah.
else?
Thank you. We will get takeaway notes
Y-
on that
Uh,
week.
I actually shared the link to the document that I was using on the chat.
Or on that wall.
On this chat.
Okay, okay.
Hi, Michelle.
Yes, hi, Winnie.
Sorry I came in late,
No problem.
but I can't wait to do the real trading.
Uh-huh.
Eh, Tuache kudanganywa huku nje na watu wenye wanasema wana trade na kumbe ni scam. So yeah, so so I'm glad that you're teaching us the real trading. You know, we went to school, we just did the theory, and that was a long time ago. Markets hazikuwa open like online nini. It just used to happen as the broker, as the physical thing.
Yeah.
So yeah, I'm glad that you're opening our eyes.
No.
Yeah, thank
Uh-huh.
you so much.
Karibu. Karibu. Uh, anyone else with a comment? But the class is over, so anyone is free to leave.
Okay, bye.
Okay, bye. Thanks for joining.
Yeah, bye and good night.
Okay, bye. Have a lovely holiday.
Merry Christmas.